Okay, let's talk a little bit about trends. Trending price action. Here we have a trend and then price consolidated a little bit, trended up a little bit more, and then the remainder of the day just consolidated and couldn't make any higher highs. Um, as you can see, what happens with the trend, and I have a volume indicator down here which also plots the volume onto the bars, onto the candles, I should say. And what happens is this is the way a trend generally works. This is real simple what I'm about to explain, but I think some that are new, it'll help them with some that are new. But this is extremely simple, so I don't mean for it to sound condescending. But what happens with a trend is an uptrend, for example, price moves, shallow pullback, and then moves higher. What happens? Traders begin shorting these highs, and then price comes back up, breaks above that high, and usually the break above the high has high volume. And the reason for the high volume is because the traders that shorted here place their stops somewhere around this here. That in a sense keeps fueling this uptrend and continues happening. This continues to happen, and a nice trend will, each time it breaks the highs, will have a nice widespread bar that breaks. And this continues happening until the those that are shorting the market give up. Essentially, they're not going to step in and short anymore because they've had their fill. They don't want to do this anymore. By this time, they've realized that the trend is up. Now, what happens when they, as soon as they realize that, what happens? The pullbacks get deeper, and that's because there are no stops here to fuel the trend. And those that are anticipating this trend and trading it, what happens is they start seeing the highs are not as strong. The new highs that are occurring are not as strong. As we can see, we can't close above them. They don't want to pull the they don't want to pull the trigger on the shallow pullback, so they're going to start looking for a support area to look for a pullback. Essentially, that's what happens on a trend, regardless if it's a downtrend or not. And at some point, price action will, buyers and sellers are not interested in the market, and then we start consolidating as we did towards the end of the year. So that's a little bit of the psychology of the trend. But what I want to point out is that trends do not have to be that difficult to trade, as long as you have a clear definition of for a strategy that you can use. I'm going to talk about the Z Keltner strategy because that's what we use for a trending strategy. Aside from the Z Keltner strategy, some of the other tools we use to confirm a trend is, for example, we sent out a video last night, talked about the levels that we're looking for, and these were wide levels. And that's where we're looking for price to hit those levels, either go through them or bounce off of them. That gives us a general idea where, for example, why at this level here, not on this chart, but I'm just speaking in general. Okay, price comes down here. Okay, now we know price will move without resistance to this level. Okay, once it hits that, it's either going to go through it or not. That's our, or it'll pull back to this level. That's your broad analysis. When a market opens up and your trend strategy, so the Keltner channels are showing an uptrend, the Zuna trend paint bars that are on the bars are showing an uptrend. The next thing what you want to do is you want to look at your breadth indicator. So the market internals are very important. When volume breadth flat lines like it does on this day, it's like that. And then you look at your tick chart. Tick's something that everybody can use. And you begin to see that the tick trend is also green, so it's bullish. That's this line here. And then you take a look at your ADD, which is the difference between advancers and decliners. Take a look at that and you see that that's moving up too nicely. So you have a trend. In a sense, you have a trend. Now you have a strong trend which you can trade with confidence. Essentially, what you want to see is all of these, and then you want to see all of these markets basically making higher highs and higher lows. When you start seeing, now it's okay if the ADD lags a little bit. It usually won't, because in the beginning it spikes up so much if it lags a little bit. So you have 1, 2, 3, 4 trades here, these four arrows here. Okay, that's enough for any trade. These other two here were risky trades, and the reason for it is because, as you see, the market S&P 500 is making higher highs. At this point, we had sold off too much on the ADD, and we didn't make a new high. although the ticks were still on an uptrend and the volume breadth was an uptrend as well, you start seeing volume breadth pull back just a tiny bit, which is still fine. But the key missing puzzle here is this ADD. You want to see that make higher highs. When it doesn't, what it's telling you is that there's high volume and it's all bullish volume, but what's happening is it's not a broad, not all the indices, not all the issues are making higher highs, and when you don't see that, then the trend is going to pretty much die out. After that, you really don't have a strong momentum trend anymore, so what you have to do is start relying on support and resistance levels to trade the pullbacks if you want to do that. But taking advantage of a strong momentum trend like this move, using the tick, the ADD, and the volume breadth with some trend indicators, the Zener Kelton channel is our favorite, and we use the paint bars, you can pretty much have your morning all set up when this happens. 4 trades, no stops, you make your money and you're done. And it's not just, it happens fairly often. Now, I'm using a 1 minute here. Let's look at this as another example. Yesterday, again, you can see the ADD is moving down. Okay, from the top of this move, it's moving down. The tick charts are in a downtrend. Okay, the tick trend, this line here, is in a downtrend because it's red color. As you can see, the volume breadth, because this move happened towards the end of the day, it didn't have enough time to get flatline like it did here. But what is it doing? It's also moving one way. It's moving completely just one way down. Okay, so combining these three, you got your advanced decline differences here. You got your tick, which is telling you if issues are down ticking or up ticking, and where are they ticking, above or below the zero. And this tick trend will give you the trend via the color, and then you have your volume information telling you that the volume is excessively to the downside. So when you see that, you're looking for a high probability trade. Here you go, there's your trade, and so you take it. Now you can put this on a tick chart, and then you would have 1, 2, 3, 4, 5. You would have a lot more trades. This is just a 1 minute chart. So that's how you would tackle a trend, and it doesn't have to be that difficult. It's just a matter of combining the right tools. So one of the advantages of trading the E-minis is because we have these internals that can help us dramatically define a trend when the markets are trending, and then even better, when to not counter trend trade or when to not trend trade within a ranging market, which saves you a lot of money by not getting stopped left and right. So hopefully this helps you. Just combine your internals with your trend strategies and you should be in good shape.